We couldn't have the lectures last week due to unavoidable reasons. Before that, we commenced the Bills of Exchange Ordinance, the provisions related to Bills of Exchange Ordinance. Then we discussed about what is a Bills of Exchange, Bill of Exchange, different provisions applicable to that, who is a holder in due course, negotiability, etc. Then we spoke of different types of bills of exchange. Then we also spoke about promissory notes, and that is that. And now, as I indicated on the previous date, today we are going to discuss the most popular subject of all, which comes as a subheading of Bills of Exchange Ordinance, that is checks. The law on checks. Keep in mind that check is also a bill of exchange. We, here and there we touched upon checks in our discussion on bills of exchange as well, right? Nevertheless, now before going into the core areas of the law related to checks, I have a question for you all, right? Question is simple, right? Most of you are working at the moment in banks or affiliated institutions in the finance industry. My question to you is, why are checks popular in the usage? You can unmute and give me your comments, or you can type in your answers, whatever. Question is, I will type it up. Yes, go ahead, Leela.
Keeping cash is a risky thing because check is just a paper, and it's easy to use, and you can operate the bank account by using your checkbook. So
Good.
it's a safe method.
Good. Safe device, yes. Precise. Good. What else? What else? Keep them coming in your answers. I want all of you all
When we
to
talk about
part.
post dated checks, so that's also like it's like a credit facility. You have a date, you have a period to pay, so you can organize your payment. So that is also one of the advantages.
Good. Correct. And when you all are answering like that, when your colleagues are answering like this, and upon my confirmation on that, I hope you all are getting your notes also down, your references, etc. Because this is one benefit of classroom exercises, right? It's a formation of cash. Nimalendra, can you explain that a bit, please? It's a formation of cash. What do you mean by it's a formation of cash? Achala, correct. Alpha, maybe you can deferred payment. Correct. That's like Lalani just explained. Nimalendra, yes, it's a formation of cash. Others, see, this is an area which I see there's a gap in the knowledge in the the industry personnel. In other means the bankers. I see quite a considerable knowledge gap in terms of the usage, the practice, and the the law applicable to checks. So I take this opportunity and discuss whatever these things that you don't know, certain things you don't know that you don't know. So that's dark, right? Just a check for payment. It means okay, it's a formation of cash. All right, correct. What else? So I'm going to take you to section 73 of the Bills of Exchange Ordinance. I hope you all are getting your, references down. Check is a bill of exchange, which defines as a bill of exchange drawn on a bank payable on demand, right? On the other hand, all checks are, like I mentioned on the other day, all checks are bills of exchange, right? But all bills of exchange are not checks, right? So we will discuss certain, characteristics as to how these two differs, right? In the law of agency, this is also important. The authority given to your agent to draw checks does not necessarily include the right or the authority to draw bills of exchange, right? These, I don't know, but these may be question. It means right. Okay. So in the case of Foster versus in this case, it said, now, the in the law related to agency, principal and an agent. Agent is a representative of the principal, right? We also study about the relationship between bank and customer is also synonymous to a principal and an agent. So bank is an agent of the customer, right? So authority to draw a check given to the agent by the principal. In this case, it was decided that that particular authority does not necessarily mean the principal have given the authority to the agency to draw out bills of exchange, right? That's very important, because if that is the case, that if the agent draws a bill of exchange for and on behalf of the principal based on the authority of drawing checks, that would be considered as ultra vires or going beyond the powers, and the agent will be solely responsible and there won't be any responsibility towards the principal. Normally, under the law of agency, whatever the agent do for and on behalf of or in the name, under the name of the principal, under the authority, right, the principal is liable and not the agent. But if he goes beyond his powers, which is given to him, he will be personally liable. That's very important, right? The other difference is that is arising from the customer and banker. There's always a relationship. When you talk about checks, you cannot leave out the relationship between bank and customer. So when you talk about checks, there will be definitely a bank involved, because the drawee should always be a banker, right? A check, third one, a check is intended for prompt payment, prompt presentment of payment, while a bill of exchange payable on demand is deemed to be a continuing security. On a practical note, I must emphasize the fact that, right, in certain instances, or majority of the instances you come across in today's context, people, banks, also lending institutions and even private parties, they keep checks as security, which is not what is intended in a check. Check is intended for prompt payment, whereas bill of exchange are, can be considered security. For that matter, under section 16, if I'm not mistaken, under the money lending ordinance, right, you cannot keep a check as a security. It's not valid. But that is only, transactions under the money lending ordinance. But then again, you see the principle behind this. is that the intention of the usage of a check is for prompt payment of something. Like you give cash, similar to paying through cash, right? Then a check, see, bills of exchange, you remember the things that required for acceptance. We spoke quite briefly on that. Now, bills of exchange, you don't have a say, kind of the acceptor on whom the bill of exchange is drawn on, right? But check, unlike that, is not in the ordinary course accepted. See, they are capable of being accepted if the banker so chooses. We discussed several instances when we were discussing about BOEs last time, right? I said, what if this happened? Practically, it doesn't. Theoretically, it can be accepted, but practically, it's not being done by bankers. So this is what I'm trying to say. This is not stated in black and white in the law, but the banker has a discretion in certain instances whether to accept or not to accept, if there is maybe a blur line or if there is a discretion involved, right? We will discuss some of those instances whilst we are progressing with the lesson. So we discussed checks are always drawn on a banker. Checks are, again, bills of exchange are, more, this is not a hardcore reason, but in the common parlance, you come across in practice, checks are very much on domestic payments, made on domestic payments. But the bills of exchange, it's more, lean towards international payments, bills of exchange. But checks are mostly domestic. Not to say that there cannot be international checks, but there are. But the usage I'm talking about, right? Right. Okay. If you have gone through certain past papers, I must tell you this, right? I may have already told you. Studying being present for the lectures and then studying what your notes or whatever is not sufficient. It's imperative that if you want to get through this law paper, which we have made mandatory, you need to go through and attempt the past papers and be yourself familiarized with that, because that's entirely the preparation for that is absolute necessity. You must at least attempt papers for the last 5 years. I'm talking about at least 10 papers, right? And when you look at the question history in the past papers, this was commonly questioned, what I'm about to tell you. The dual aspects of a check. Dual aspects of a check. What do you mean by the dual aspects of a check? Right? So in practice, the check plays a dual role. On the one hand, it is subject to the bills of exchange ordinance, which we spoke about, and is considered as a negotiable instrument. So on the one side, it is a bill of exchange. So if there was a question, you would see that question quite frequently in the past papers, right? What are the dual aspects of a check? I have seen some sad answers, right? That's the most presentable word I could use here by certain candidates, right? I mean, we at lectures, we keep on saying what are the dual aspects of a check, but my goodness, they are කොහෙද යන්නේ මල්ලේපොල් පිළිතුරු තමයි දීලා තියෙන්නේ, right? Dual aspects of a check. ද්විත්ව ප්‍රතිකඩයන් කාර්යයන් මොනවාද, right? check pataka. One is it's a bill of exchange and subject to the provisions of the bills of exchange ordinance and is considered as a negotiable instrument. Right? Considered as a negotiable instrument. Secondly, a banker standpoint, it is a mandate. What is a mandate? The check is a mandate issued by the bank's customer requiring the bank to pay a stated amount to a stated party or no after the date of the check. Right? Now, that is a mandate. On the one hand, it is coming under the bills of exchange ordinance and it's a negotiable instrument. On the other hand, it is an order or a mandate given by the customer to the bank, where you would see the agency relationship, bank being the agent. So the customer, it's an order, customer hands over the check to the payee. In the check, it's an order on the bank. Drawn on the bank means it's an order on the bank. So those are the two aspects. So if it is questioned, what are the dual aspects of a check? This is the answer. More than me saying this is the answer, you need to understand what the dual aspects of a check is. If you have any questions, you can ask me. Right? So there is no separate legislation for checks and bills of exchange separately, but both are given in the bills of exchange ordinance. But in the UK, you get the Cheques Act, but not in Sri Lanka. Right? So the definition of a bill of exchange is applicable to a check. Right? Section 73 in addition to section 73, which we just discussed. Right? Right, okay. Then anybody who has not seen a check? So in a check, how can I mention this? Give me a moment, I will, because I have to redact certain information. Especially the fact that these are being recorded. Let me redact certain information of a check that I'm about to show you. Right. So you get a checkbook and then you let me check and redact some information, right? It's not getting redacted. Right, so how can I show this? Give me one moment. Hard luck. Right. Okay. Yeah. So you get yourself a check, right? On the top left hand corner, you will see, I don't know whether there is no prejudice. I'm just calling and I'm not promoting any bank, right? So you on the top left hand corner, you would see the name of the bank, right? The name of the bank on whom it's drawn, and then the branch and the address. Then you get the dates, right? The dates that you need to complete. We will talk about the effects of writing and inserting the dates, current dates, post dates, and not dating, the legal effects. Then it says pay, this is my order, pay to whom, the payee or to the bearer, right? Then I have to mention the amount in words and the same amount in digits. And then of course you have to sign it. Underneath you get the first 6 digits onto your left hand side represents the check number, right? Represents the check number. These things you need to know. The second 4 digits, then so the first set of digits on the check number, there is a second set of digits. In the second set of digits, the 4 numbers represents the bank number and the branch number. So bank number 4 digits, the other 3 numbers represents which branch it is. And the last set of digits shows the account number, right? This is how all checks in Sri Lanka and mostly elsewhere also it is formatted. And at the back of the check leaf, you would get two areas. First one is for endorsements. We spoke about endorsements, Peterson Sandha. And the second one is on banks crossing stamp, the place that is given for that, right? I hope you can see this too. Right. Now, rules relating to, I'm going to come to.
Excuse me, sir.
Yes.
I need, good afternoon. I need sorry, I have a question. Why companies issues no date check? I have never seen, but if they feel this is no date check, yes, sir. I have never seen, but that's why I asked.
Good question. I'm going to, Quilini, I'm going to park your question for a moment because this is a specific area I'm going to explain in a moment with regard to the validity of the date, current date, future date, and no date, right? So I'm going to park that question for a moment and I'm going to answer that rather, once I explain that. If after the explanation still you didn't get that, I will ask you, then I will re-explain again. Sounds fine?
Okay, sir. Thank you.
Right. Now, related to crossings, right? You have seen crossings in a check, and again, this is another area that is being questioned. I've seen being questioned quite frequently, right? What are crossings? But in order to understand what are crossings, we'll firstly, the effect of legal crossings, we'll see how it originated, right? It's actually originated as a practice of the bankers. Now it's there in the law under section 76, right? However, it originated because the crossings were originally, was for the purpose of given to the bankers in the process of clearing. So what happened was, in the original clearing houses, right? The clearing house, now you have Lanka Clear. In the original clearing houses, each bank had a box. Each bank had, HNB, commercial, whatever the box with his name marked upon it. So each bank had their own boxes, right? The clerks of different banks, the clerks from different banks who are the collecting bank. So, this NTB is a check, but let's say I gave it to a person who have a BOC account, that's the collecting bank, right? So clerk from that BOC, let's say for this discussion, he would leave checks drawn on the bank in the box so marked, right? But in order to indicate the bank to which the payment was to made, the clerk would cross the check. That is, write the name of the collecting bank between two parallel transverse lines. So what happens is, let's assume that I give this check to a payee who maintains an account, maybe BOC, commercial or whatever, and not Nations Trust, right? Then what happens is that that bank, let's assume commercial bank, that bank becomes the collecting bank for that payee. They have to collect the payment from Nations Trust because the check is a NTB check, right? They go to the clearing house. Clerk from commercial bank goes to the clearing house with this check. You get all the boxes in the clearing house with the names of the banks. So he has to put this into NTB box, right? Because that's the paying bank. But then again, to indicate, now the paying bank, NTB should remit the payment to the collecting bank, that is the commercial bank, in order for them to, the client to get the payment. So in order to indicate to which bank the payment should be remitted to, what the clerk does is he draws two parallel transverse lines and write commercial bank. That's how it originated, right? That's the beginning of that, right? So crossings were given statutory recognition in England by series of facts back in 1856, and in Sri Lankan Bills of Exchange Ordinance under sections 76 and 77, this was given statutory recognition. 76. Look, crossed checks. Listen very carefully, because this is again an area that I've seen which is so much question, right? Where a check bears across its face an addition of two parallel transverse lines, either with or without the words "o," right? Or not negotiable. That addition constitutes a crossing, and the check is crossed generally. So you get two parallel transverse lines, maybe with just a blank transverse lines, or with the words not negotiable. That is called a general crossing. Where a check bears across its face an addition of the name of a banker, face, in addition of the name of the banker, not negotiable, that addition constitutes crossing, and that check is crossed specially and to that banker. So practical effect of it, you have two parallel transverse lines, let's say under general crossing. It states just a parallel crossing. It's only the fact that maybe it's not negotiable, you have to deposit it to encash it. If the name of a banker is written there, it said it's crossed specially. Unless the crossings are cancelled, you have to deposit it to that particular bank. That's the issue. That's the reason. Now, crossing by drawer or after issue, a check may be crossed generally or specially by the drawer. So the drawer can do that. Or else, where the check is uncrossed, the holder may cross it generally or specially. So I, as the holder, as the drawer, I can cross the check. The payee, if I haven't crossed, the payee or the holder of the check can cross the check if it's not crossed. If it was crossed generally by me, the drawer, the payee can cross it specially, right? In addition, he can write the name. Where the check is crossed generally or specially, the holder may add the words "or rather not negotiable." So you can, whoever who has the check can write or mark it specially in addition if it's a general crossing. Where a check is crossed specially, the banker to whom it's crossed may again cross it specially to another bank for collection. But you don't get this much, but this is possible technically. assume it says, let's say this check, NTB check, I cross it, right, and I give it general crossing, and the holder cross it, endorse it, and gives it, but he crosses with in the transverse lines he writes commercial bank, right? Then commercial bank, that's a banker's crossing, right? The commercial bank may, when it's come for collection, right, when it goes for clearing, so the journey of the check in the hands of payees and everything has come to an end. Now it's in the hand of the collecting bank. The collecting bank can cross the check to another bank for collection. That's also possible, but you don't really see that. The customers won't really see that much. Where an uncrossed check or a cross check generally is sent to a bank for a collection, he may cross it specially to himself. So the bank also, remember the origin, can cross the check to himself. The effect of crossing, like I told you, it's a direction to the paying bank that the check should be paid only to another bank. Right? You can't pay it to. It's a direction to the bank. You can't pay it to the customer over the counter. Basically, that's what it means, right? The bank cannot ignore a crossing and pay a cross check over the counter. If it does so, it's amount to negligence, and the bank is liable on the check, right? Right. Now, types of crossings we just discussed, and who may cross a check also we discussed. Then section 78 says crossing is a material part of a check. A crossing authorized by this ordinance is a material part of the check, and it shall not be lawful for anyone, any person to obliterate or accept as authorized by this ordinance to add or alter the crossing. So it doesn't say that you cannot alter it. It says you cannot do it without authority, right? Okay. Now, duties of a bank as to payment of a cross check. What does the banker needs to do? What does the banker needs to know to do? So if it is crossed specially to more than one banker, except when crossed to an agent for collection, being a banker, the bank on whom it is drawn shall refuse payment thereof, right? So if it is, now, you understand, I told you about the dual crossing. Dual crossing can only be done by a banker. A drawer can't do that. So if there is a crossing, the bank gets it over the counter or somewhere, with two crossings, it's not valid, right? That can be done only by a banker at the time of collection, or sending the check for collection, other than for the mentioned out. So if it is not the case, the banker shall refuse the payment, right? Where the bank on whom a check is drawn, which is so crossed, nevertheless pays the same. So it's crossed, but the bank pays it, ignoring the crossing, or pays a check crossed generally otherwise than to a banker. That means paying over the counter, right? Or if crossed specially otherwise than to the banker to whom crossed. So this is crossed as a commercial bank, but then that guy, the payee, goes to, let's say, NDB and deposits this, and NDB accepts this. That's what it says. Or his agent for collection being a banker, he is liable to the true owner of the check for any loss. In the event if there was a loss, that bank who accepted the check, despite the specific instructions in the crossing, is liable on that, right? Okay. However, there is a protection given to the paying bank under section 80, right? It says where the bank on whom the cross check is drawn. The bank on whom the cross check is drawn. Now, paying bank in this case is NTB. in good faith and without negligence pays it, if crossed generally to a bank and if crossed specially to the banker to whom it is crossed or his agent, being a banker, the banker paying the check, if the check has come into the hands of the payee, the drawer shall respectively be entitled to the same rights and be placed in the same position as if payment of the check. So basically, in simple words, it says the paying bank need not be concerned about the the genuinity of the the crossings, because there is no way the paying bank, why it is there is no way of the paying banker knowing that the paying banker, unless they have the holder has an account, they have no idea as to who the holder is. So insofar as they are concerned, their obligation is only to see whether the check is drawn in order, check the signatures, amounts, and see whether the crossing is done and pay that accordingly. And it's not his business to not his business. You cannot hold the paying bank liable in the event there was a fraud on the part of crossing somewhere down the line if it was not crossed properly. Then protection to the collecting bank. In this event, let's say I give the check. I give the check. Right. I give the check to what do you call the payee who has a commercial bank account, let's say. So where a banker in good faith, this is the protection by law given to the collecting bank. Where a banker in good faith and without negligence receives payment for a customer of a check cross generally or especially to himself, right? It's, let's say, cross to commercial bank. And the customer has no title or a defective title there, to the banker shall not incur any liability to the true owner of the check by reason only of having received such payment. For an example, right? For an example, let's say it says pay cash or bearer, and a person comes to the bank, NTV or whatever, or maybe and it says, and it's cross, let's say account pay. Person comes to the bank, endorse it, gives to the bank, the collecting bank, let's say it's commercial bank, anyway, whatever. He's a collecting bank, sends it for clearing, get the funds and release the funds, or credit rather, not release, credit the funds to that particular account. And it finds out that been found out that that particular person has stolen the check. The law protects the collecting bank from any liability for that particular action, because in law there is a offense called passing off. That means using the other people's title on property and using it, right? Using it, then that's an offense. So if you use other person's property as if your own property, that's an offense under the law called passing off. So this protection is given to collecting bank, because that is, technically speaking, is passing off. The collecting bank is using the property of the real owner of the check as if it's owned by the person. So because it's not reasonable to inculpate liability on the collecting bank, the law has protected the rights of the collecting bank from that particular offense. So there is a question, is it essential to cross a check in print form? Can't we cross checks in our own handwriting? Simple answer is yes, you can. Very simple. This is that's completely fine. No issues. You can cross by hand. Right. Then we spoke of not negotiable crossing. Then we have to discuss. We spoke of not negotiable crossing, right? The effect of not negotiable crossing is just alarm, a warning to the payee that this may be stolen, or the holder may not become a holder in due course, because it's a warning in not negotiable, as we discussed quite lengthy in the previous instance. A better title is not passed on to the holder if it's a not negotiable crossing. Yeah, of course you can. Right. Then we come to.
Sir, how can we identify is that stolen or not?
You can't, unless you can't identify. That's why the protections are given. The respective protections are given under 79 and 82. The paying bank and the collecting bank, respectively, insofar as their boundaries are concerned. You wouldn't know, but that protection is given. Otherwise, you can't practically use this. Otherwise, it's not going to be popular if the banks are not protected on those aspects. Because technically speaking, the bank is committing, knowingly or unknowingly, the offense of passing off. Right. Then we come to account payee crossing. Remember, now not negotiable crossing is recognized in the ordinance, as we just discussed, right? However, the account pay crossing is not mentioned or sanctioned anywhere in the Bills of Exchange Ordinance, either in the English Bills of Exchange Act or in our ordinance. However, no one can say, because it is not written in the law, that it is not recognized. No, out of banking practice and customs, practice from time immemorial, you call it, right? Crossing has become part of our common law because it's been there, and now there are decided cases by superior courts, right? Now, in those decisions, what it says is, this account pay, now this is, I'm talking about the recognition of account pay crossings, let alone the effect. It grew out of customer usage and habit and acquired a legal meaning as a result of these judicial decisions. It's not prohibited despite the lack of statutory sanction, right? So this was recognized in Atlantic Mines Limited versus Economic Bank in 1904, 2 King's Bench, page 465. Right. Now, the words account payee, what is the meaning of, what's the resultant position of the words account payee, is that it operates as a warning to the collecting bank, right? If a collecting bank collects a check for a person other than the payee, right, without making reasonable inquiries, it would be liable to be denied on the grounds of negligence. The protection afforded under Section 82 of the Bill of Exchange Ordinance, right? So, see, I give this NTB check for an example. If a collecting bank collects a check and I say account payee only. In this check I write, Amila Pereira, pay Amila Pereira, right? So that's the payee. And then I cross this check with two parallel transverse lines, account payee only. right? Account payee only. The effect of that is pay this only to this name payee. But that doesn't mean the account payee, Amila Pereira, can't endorse the check. He, let's say, endorsed it to Sampath Fernando. He, at the back of it, endorsed it to Sampath Fernando and then signed it. Technically speaking, Sampath Fernando goes to his bank. Let's say it's whatever, DFCC. He goes to DFCC and deposits this. Then DFCC will have to make the inquiries to ascertain that they are accepting this for collection, not on the named account pay, who is Amila Pereira. They are accepting this, who is another person other than the payee written on the face of the check. So they have to make their own inquiries and be satisfied that this is a genuine person, right? If they have not, sometimes if they have not done that, and Sampath Fernando, who came to DFCC, let's assume he was a rogue and he took this check unlawfully or stole it, then collecting bank, DFCC as the collecting bank, would be held liable under section and will not get the protection given for collecting banks under section 82, right? 82. They have to do their due diligence and show that they did their duty. If that is the case, they will be protected, right? So like I said, these words, although it says account payee only, does not legally prevent the transfer of the check by payee to a third party and do not destroy otherwise the negotiability or the transferability of the instrument. It doesn't. I'm saying it's for account payee only. For that matter, then I am, as the drawer, washing my hands. I'm saying no. My intention is that he gets this check and he uses it. So my advice to you all, see, that's why we say check is a versatile instrument. Right? You can use a check in any of those ways. But insofar as your personal checks are concerned, I'm telling you all this, use all these protections and all these precautions given in the Bills of Exchange Ordinance with regard to usage of checks. Right? Okay. Before that, yeah, okay. Okay. I'm going to discuss about one topic now, and thereafter, I'm going to discuss about the date of the check. Then I will address your question. Now, what is next subtopic is about stale checks. What is a stale check? Anyone? What's a stale check?
Expired check.
Expired check. Yes, others?
A check which has exceeded 6 months period
From
the date which was written.
Okay. Good. Others? Others? Who says 6 months? So stale is stale. I'm not going to dwell much on that. Stale is stale. It's over the period, validity period now. Why 6 months? Who said 6 months? Where does it say 6 months? Right. Yes. It's a banker's it's a customary practice in the law of banking. It's not stated or recognized. Stale check is not recognized in the bills of exchange or any other statutes for that matter. Actually speaking, I am currently arguing a matter in the civil appellate courts on the legal validity of a stale check. Right? Still, the arguments are proceeding. Basically, there are celebrated cases on stale checks. It's the legal validity of the check. Mind you, for our discussion's sake, a stale check is a check that is expired or has passed its validity period or which has passed 6 months from the date on the face of the check. Date mentioned on the face of the check. Right? Date written in the check. So date written in the check. Date mentioned. Now, it's funny, right? I came across a situation. I'm not talking about a banking assistant or a clerk. Long years ago, I got this question from a bank, reputed huge bank, a question about a stale check. What do you mean by stale check or whatever? It came as a huge issue. After you listen to this, you might see it's that that is a very frivolous kind of a reason. But then again, when you look at, I was a bit shocked for a reason that it came from a huge bank, and also this was originated and people were they were ambassadors to this question also, in the sense they were representing that it's I who raised this issue. See, in any check, you would see who are the publishers or the printers of a check. I know about 2 companies who print checks in Sri Lanka. So the question that came to me was, this check was printed on such and such a date. Therefore, we have a huge issue. We have printed about 500 million check leaves by this company, which has, and the date that we have printed these checks, these batches, 500 million. Mind you, this is a senior manager in the check clearing department of this particular bank. Not clearing department, check operations department. It's a 500 million check, and the date of printing has lapsed 6 months, and it's a huge loss to the bank. What are we going to do there? I did not know. I couldn't fathom whether to laugh or to cry or to just bang my head on the table. Right? With this question. Why? Because, it is with them whom we entrust our monies, especially. And if this is the knowledge or this is the level of thinking of these people, goodness gracious me. Right? But then again, just imagine the fate of, because that's a decision that would be a huge number of people will be affected. Therefore, keep in mind, it's not the printed date. It is the date that the drawer mentioned on the face of the check, right? So this validity period of 6 months can be curtailed or limited by the drawer or the holder. And at the time of even requesting of a checkbook, he might say, please print this. So you can even write it. You can say valid for 180 days or valid for 3 months or valid for 90 days only, like that. You can limit the validity period of the check. Either you can get it limited and restricted, printed by the bank itself, or you can just write it on the face of the check and limit the period. So that validity period comes from the date of the check, and please remember, it is not from the date the check was printed. The check leaf was printed. Yeah. So it could be government checks or any checks. Even you can limit the validity period. So you know why you do that is this is for budgeting purposes. So if you limit the validity period, then you know for your accounting purposes, this check should get cleared within this period. You don't have to wait for 6 months to do the accounting and the reconciliations, right? That's why it is there. Right. Now, in some countries, stale checks are governed by statutory rules. Not now. Sri Lanka is 6 months because banking custom. Like in Australia, a stale check is not stale not in 6 months, like in England and here, but for 15 months. Earlier, formerly in Australia, it was 12 months, but found that every new year customers forgot the change in the year and wrote the old year and dated the check. So to overcome this, they made it 15 months, right? So in different countries, it could be different. So in Sri Lanka, as well as some other countries, it's 6 months. The case, if I recall, I don't have it now, it's Hong Kong Far Shipping versus Kaisha Limited. It's in that Hong Kong Far Shipping Company Limited. Hong Kong Far Shipping Company Limited versus KAISHA Company Limited. In that case, the court held that, or rather defined what a stale check is. It's and you have to recognize it despite the fact that it is not statutorily recognized, right? Right. Then the issue with regard to the date. Can you all, my knowledge of refreshing mind, can you just type up your company names just for my reference wherever you are working, type it and just share wherever you are working, banks or finance companies. Yeah, like that. It doesn't matter. You don't have to write Hong Kong and Shanghai Banking Corporation Limited. HSBC is fine, right? And Commercial Bank of Ceylon is not required, so you can say Commercial Bank. Others? Okay. Yeah, keep them coming in. So I'm going to explain to you now, listen very carefully, about the legal effect on post-dated checks. This is provided under section 11, 12, 13 of the Bills of Exchange Ordinance, BOE. The bankers should have a good understanding of the legal rules pertaining to the date or the post-dated. Normally, a person draws a check with the date, the current date or tomorrow, on which is drawing, not tomorrow, right? If I'm drawing a check today, I put today's date. right? Secondly, he can put as the date earlier date. You call it an antecedent date. I draw a check today, but I put yesterday as the date, right? Those checks are called antedated. Anti කියන්නේ මේ uncle anti නෙමෙයි. ANTEDATED antedated, right? Antedated, that is inserting a previous date, then you get the current date. And also by banking practices, bank does not pay checks which are 6 months have left, stale check, so you have to keep that also in mind. For example, you can insert a date 5 months and 29 days earlier. So tomorrow if he doesn't do that, it's a stale check, right? I'm saying technically you can do that. Thirdly, the person drawing a check can place on the check a future date and not the date on which it's drawn, right? So 3 categories of checks: drawing, the current date, today, the drawing date, or antedate, that's a previous date, or a post date. Now, the issue is the legal validity of the antedated and post-dated checks. Section 13(2) of the Bills of Exchange Ordinance recognizes antedated or post-dated checks. This is very important. Section 13. Section 13(2). Section 13(2). A bill is not invalid by reason only that it is antedated or post-dated, or that it bears a date on a Sunday. So that doesn't mind, right? You don't need to worry about that, right? But keep in mind, the bank should discourage the customers issuing post-dated checks, right? Because why? Because drawing post-dated checks is an indication that the customer is in financial difficulty. One indication is that you don't have money now, but so you have to discourage this practice. Post-dated checks are a problem for banks mainly because if the bank pays a post-dated check before its date and thereafter dishonors an earlier check issued by the same customer because of lack of funds, the bank will be liable in damages to the customer. So this is what I will explain that in simple terms. See, I am the drawer, Rangali, right? Drawer. I issue the first check dated the 24th of December 2021 in favor of ABC. Second check dated today, the 2nd of October 2021 in favor of X, Y, and Z, right? Now what happens is the second check goes from hand to hand and it goes on the voyage of what a usual check goes, 2 parties, and one party to another. The first check, ABC Limited. So the second check now, let's say today is 2nd of October. I gave the second check also. First check also I gave it today, but I wrote the Christmas Eve as the date. I post-dated it, and the second check I gave is actually the current date. Now the first check, the payee or the bearer of that check goes to the bank, not tomorrow, which is a Sunday. On Monday, that is the 3rd of October, he goes to the bank and he deposits it. And there is funds in the account. And the bank, despite it's being post-dated, it clears the check and make the funds available to ABC. Any issue there? No. But the second check, XYZ, goes to the bank next Friday, right? Its date is today. Next Friday to the bank and deposits it. And the check bounces for want of money. What happens? It gets bounced, returned with refer to drawer, lack of funds as return reasons, right? Then the bank is liable on the check. The bank is liable. Bank has violated a direct order from the customer, right? Negligence, first degree. Bank is liable because the first check should have been returned as check post dated and returned, right? Whereas the bank paid that. Because of that, there is lack of funds in the account. That is the resultant position why the second check got returned, right? So keep that in mind. It's crucial. Now, wait. Now I come to the question that you asked. Somebody asked, right? About blank. Then in explaining that, I'm going to section 12 of Bill of Exchange Ordinance, right? Omission of date in bill payable after date or acceptance after sight. You don't need to worry about a bill, omission of a date in bill payable after date or acceptance after sight, because this acceptance and all these things are mainly for bills of exchange and not checks only, because the checks are intended for payable on demand, right? So let's subject to the required changes, we'll try to dissect this section, right? Where a bill expressed to be payable at a fixed period after date is issued, undated, right? Where a bill expressed to be payable at a fixed period after date is issued, undated. Meaning, in a bill of exchange, you can say so and so. I expect to pay this amount to so and so on this date. Whatever, it's undated. That is what it says. Or where the acceptance of a bill at a fixed period after sight is undated. Something similar to what the earlier matter. Any holder may insert therein. So think about a check now. A check without the date. Any holder may insert therein the true date of issue or acceptance. So acceptance part doesn't necessarily come in the check because the bank is accepting the check, right? And the bill shall be payable accordingly. So in other words, in simple words, this section says if, right, this particular section says if a check is undated, doesn't mind, the holder of the check can insert the true date of its issuance. True date. Remember that, true date. He cannot insert a false date. Let's say I issue a check to the payee without a date today, right? He also forgot about it, the payee. He has the check. Then the payee, after 6 months, saw this check. Then he remembered, my goodness, I forgot about this check. What am I going to do? He has to insert, he has the authority to insert the date. If it is inserted, it will be accepted. But there is a requirement that he has to insert the true date of the check. What would he normally do in such an instance? If we insert the true date, the check is stale, no? If we present it for payment, then what he will do is, he would insert another date, not today's date, but so to ensure that he is within the 6 months in this present month. Then what happens? The holder may insert there in the true date of issue, and the bill shall be payable accordingly. However, there is a proviso there. It's subject to certain things. Where the holder in good faith and by mistake inserts a wrong date, that's also fine. So either he has to insert the true date of the check, or by mistake, if he insert the true date of the check, that's fine, the check can be paid. If he don't insert the true date, and if he inserts a wrong date by mistake, but in good faith, without any fraudulent intention or malafide, bad faith, that's also fine. And by mistake inserts a wrong date, that's also fine. No issue. That's also payable. In every case where a wrong date is inserted, if the bill subsequently comes into the hand of a holder in due course, the bill shall not be avoided thereby, but shall operate and be payable. So had been true date. An example, 3 instances this talks about. First one is, the check is undated, the holder can put the true date, then it's valid. Second instance, the holder inserts a wrong date by mistake and in good faith. He made a genuine mistake. It's a wrong date. Still, it's valid. Third instance, the holder, not the holder, any endorser, previous endorser, inserts a wrong date. May be in good faith, may not be in good faith. Right? He inserts a wrong date intentionally, let's say. Mamara calling the kiwa udaharane, the example I gave you earlier. Just to ensure that it is within the 6 months period, he put the wrong date, earlier subsequent date, just to ensure that it's within that period, and endorses it and gives it to another person. That person becomes a holder in due course under section 29 HDC. That particular holder becomes a holder in HDC. So he takes the bill or that check without any defects in title earlier. That check becomes a valid check if he had endorsed it. Right? Those 3 instances. Then still that becomes a valid check. Now, we discussed about subsection 2 of section 13. That's the next section. I am going to tell you what happens. Then, how do we know whether he made a mistake in good faith, or he just inserted with malafides, with bad faith, inserted with malafides inserted the wrong date? How do we know? So for that, this is what we have to do. Where a bill or an acceptance or any endorsement on a bill is dated, the date shall, unless the contrary be proved, be deemed to be the true date of the drawing. So if there is a check on the face of it, me as the drawer, I'm saying I did not put the date, and the date that the person has put it, so he has the authority to put the correct or true date. He says this is the true date. Then it's up, if I'm saying no, this is not the true date, he has put a wrong date with ulterior motives and with bad faith, then it's up to me to prove that so and so put a wrong date. He who avers that, he who states that, it's up, has to prove, that burden is on him to prove that check is altered fraudulently by the person. Right? Any questions? I hope I answered your question. With regard to checks without dates. Then we come to countermanding of checks. Countermanding can stopping of payment of checks. Now you can do that. At the end of the day, I told you about checks. It's a payment instruction or an order by the customer to the bank. If the customer can order the bank to pay on the check, the customer can also stop the payment of the check, right? A customer is entitled to stop payment of the check that he has issued before the bank pays it. The drawing of a check and the stopping of the check are both instructions to the bank. Section 75 of the Bill of Exchange Ordinance states that the duty and authority of the bank to pay a check drawn on him by his custom is determined by countermand of payment, right? සිංහලෙන් කියනවා මේ ප්‍රතිනියෝග දෙනවා කියලා, countermanding, right? It's a technical term, this thing. And also you have to keep in mind, like the bank customer relationship, this law of agency relationship is there. So all those principles are applicable in countermand as well, right? So it speaks of a countermand, that means terminating the bank's authority to pay. It does not indicate who is entitled to countermand under the Bills of Exchange Ordinance. What constitutes a countermand and the manner in which it should be communicated to the bank is what the law specifies. So how should you do it? Prerequisites. A bank cannot act on conjecture and dishonor a check, right? I'll give you some cases. Now, in these cases, it mentioned that the customer's instructions to stop payment should be clear, unambiguous, unequivocal, and unmistakable, right? It should be in writing, signed by the customer, giving the check number and the date and the amount and name of the payee. Basically, in other words, the instruction should be clear. It cannot be unambiguous. Not unambiguous. It cannot be ambiguous, right? The issue is not on the mode of payment, mode of instruction, but whether the bank was properly informed of the countermand, right? Whatever the mode, it could be a phone call, it could be writing, right? If a bank acts on a supposed countermand which is later found to be a mistake and unauthorized by the customer, the bank may be liable to the customer for damages for wrongful dishonor of check, right? That's why all the more reason why a bank is entitled to insist on an unambiguous countermand. So it should be made at the branch unless there are special arrangements made with the bank, which the check was drawn. But now all banks are online. It's not the case. It has been the case some time back, right? The bank has to have actual notice of countermand. Constructive notice of countermand is insufficient, right? In Curtis versus London City and Midland Bank, it was held that countermand is really a matter of fact, right? It's a matter of fact. For an example, let's say the bank hears about a liquidation of a customer in the papers. That's not countermand. You need to get the info, the specific specific instructions from the liquidators appointed by them. Unless the bank gets specific instructions, it's not constructive information. It should be instructive information, right? and the bank must be informed of the countermand before the payment of the check, and presumably within a reasonable time before the check is presented for payment. For an example, the client writes a check today and sends a countermand notice to the bank Tuesday morning. The bank may have already send the check for presented the check for payment, right? Send the check. Anytime the customer can countermand a check anytime after presentment, after issuing the check. For example, let's say assume today is Monday and I just gave somebody a check and some to the payee, and something happened between the transaction and he said I can't do, and some dispute there, I can call the bank or instruct the bank, whatever the mode that I have agreed with the bank, instruct the bank then and there, countermand the check, because that check is not with me, the only method. So this is a good thing about this is one aspect about why checks are popular also in Sri Lanka, not in Sri Lanka, in the world, right? So you can at any point give, but it should be a reasonable hour at the day. You see, you can't call at 11 o'clock in the night and call your relationship manager and say countermand karan ke liye. You can't say no, that's not applicable, that's not valid, right? And the customer should properly identify check date, check number, amount, right, for me to countermand, right? A bank which pays a check even after receiving duly completed instructions of countermand is liable towards the customer. Even after effective countermand, if the bank proceeds in paying the check, the bank is liable. Then, what is a bank check? What is a bank check? I'll tell you why I just smirked a little bit, because I just remembered something with regard to this particular question that I asked from you a couple of years back. What do you mean by a bank check? Anyone? It's a bank check. Yes, keep them, your answers coming in. Some says pay orders. What are bank checks? What is a pay order? Nimalendra, issuing check on behalf of customer. Issuing check on behalf of customer. Bank pay on behalf of a person. Check written by bank and payment guaranteed. Okay. Remember, this is a law class in the sense banking law. So I understand some of you are giving your answers from a practical point of view. That also, I'm not saying those answers are wrong, but those answers are not legal answers, right? Your answers are not wrong, but legal context, it's not the most correct answer. When I say what is a bank check, so many parties use so many terminologies. What this means, I will tell you before talking about the terminologies. This means the drawer, as well as the drawee is the bank. What you are saying is the practical situation. Maybe the customer requests for a pay order. You call them pay order in different terminologies. Pay order, cashier's order, Pay order means pay order. Pay order by the bank is left to the bank. Cashier's order. That cashier's order means it's an order on the chief cashier of the bank. Written by the bank, yes, written by the bank. Cashier's order, banker's draft. What do you call bank checks, and also check on self. There are some bank draft they call CAO, cashier's order, bank draft, or check on self. Check on self is drawn on self, drawn on the bank. The drawer is the bank, or the authorized signatory rather, who can issue the check, right? The practical difference is when a cashier's order is issued before at the same time, whatever, the same time the funds are debited, it's guaranteed. So what your answers are correct, but what would be required, this is why sometimes you would say, my goodness, I have answered correctly, but why don't I have marks, sufficient marks? It's because of that, right? So the legal explanation is expected. All right. Check on self. There was an instance where I can't, for obvious reasons, name the entities or the individuals. They were about to return a bank on the advice of the head of legal, 2 checks amounting to 400 million, simply due to the fact that, right, saying that it's a invalid check because it's written check drawn on self, check on self. Because of that fact, it came to me just for some reason. The bank branch, the head of branches, they called me, and independent of the legal department, they called me and said, so and so customer, I want to double check with you. They are going to return this check. One is for 250 million, other one is for 150 million. Altogether 400 million. Some years back, about 7-8 years. Simply on the fact that if they had returned it, the bank is liable on the first degree for wrongful returning. Right? Funny some stuff. Right.
So blank check is a check issued only with the signature without the date or amount or any other information.
Yes. Come again. Blank
check is a check issued only with the signature without the date, amount, or any other information. No any other information except the signature. That's all.
That's all. So see, the implication is, if you give a blank check, drawn blank check, that you are giving the authority for the person to insert the numbers, right? So it's up to the person who's receiving it. Of course, you won't find that in cold transactions, which I mean by with strangers. Of course, there should be a relationship that has built so strong that you trust the person, the payee, with that. Sometimes certain clients, they give us checks, just blank checks, right? Then what we do is, for the legal services, so what we do is and sometimes they process the same payment through telegraphic transfer. Then I get my accountant to return the check what they gave. So that's the relationship that you have built with the payee. But it's a dangerous thing otherwise. Understood? Okay. Then there are certain simple rules that the customer should observe about checks. Always make sure you have enough money in your account when you're drawing checks, because by now I think Section 25(1) and Section 26 of the Debt Recovery Act. If a person draws a check without funds in his account, is criminally liable on the check and is liable to be summarily tried by a magistrate and fined, including imprisonment terms, right? තම ගිණුමේ මුදල් නොමැති බව දැන දැනමින්ම චෙක් පතක් නිකුත් කිරීම සාපරාධී වරදක් මුදල් ණය අය කර ගැනීමේ පනත යටතේ 25 වෙනි වගන්තිය. Plus, if a person, not only that, if a person countermands payment, countermands a payment on a check which has already been issued without any good faith, he is also, after tried by the magistrate and found guilty, he is liable on the check, subject to a fine and also imprisonment. So you can't just, for the fun of it, you can't issue checks and countermand. You can't play with it. That this is to ensure the sanctity of this particular instrument and this the transactions, right? You can't do that. You can't just issue checks for the fancy of it, right? And then countermand, or you can just issue check without funds in the account, knowing that there are no funds in the account. Then don't leave gaps between words and figures. Use all the space and add the only to the amount to be paid. 50 rupees only, like that. Never sign a check before you use it, and never sign a blank check. Right? This is what I just told you. Unless you want your check to be exchanged for cash, you should cross it with 2 parallel transfers. Tell the bank immediately if a check, your checkbook, or someone, some forms from your checkbook have been lost or stolen. Right? So I wanted you. Something. I want to mention about this to you on sum payable. This was a question that was, this is a question that arises quite in the practical scenario on the sum payable. The sum payable by a bill, maybe a check, is a sum certain within the meaning of this ordinance, although it is required to be paid with interest by state, so whatever. Where the sum payable is, listen to this very carefully. Where the section 9 subsection 2, where the sum payable is expressed in words and also in figures, like in a check, and there is a discrepancy between the two, the sum denoted by the words is the amount payable. Sum denoted by the words is the amount payable. Where a bill is expressed to be payable with interest unless the instrument otherwise provides interest runs from the date of the bill and if the bill is undated from the issue thereof. Right? So there is a discrepancy between the figures and the words. Words shall prevail. But practically what happens is, if there is a discrepancy, the bank returns the check. So now we'll see, lastly, right, standard phrases for check returns. Standard phrases for check returns. Of course, for those bankers who are here, if you take a CRN or check return notification, check path agaru we may then be පිළිබඳ නිවේදනය. At the back of it, you get the return reasons with the return codes, right? So we will just for the benefit of everyone, we'll just go through these things, right? You can for lack of funds, you will come across return reasons like effects not realized. Recommend that this answer be used when effects are under collection, clearing, etc. Funds attached, garnished. Have you come across that? Funds attached. Funds attached, garnished. Anyone? No? For an example, if there is a court order on the account attaching the funds, the balance, then it's not, strictly speaking, lack of funds, but unable to use. Very good, Nimalendra. But unable to use. Garnish it. Maybe, for an example, just put it into context. Let's say in a maintenance case or a divorce case or alimony or whatever money recovery case, the judgment creditor who got the judgment in his favor, he says that he doesn't, the debtor doesn't pay up, but he has an account in so and so bank, and there's a bank balance, and he gets a court order to remit that amount to the courts or to hold that amount. If that is the court order is sent to, or the garnish order will be sent to the bank, whatever, and the funds may be garnished, you call it, or funds may be attached. You can't use the funds, right? Refer to drawer, of course, no funds in the account. You can, technical reasons you come across. So why don't you just type up some return reasons before I just go on. Some popular return reasons. Yes. Very good. Very good. So you get, technical reasons like account close, transferred, alteration, obliteration, and requires bank's confirmation. Amounts in figures and words differs. That's section 9. Check is stale check, or post-dated check, or check incomplete. For payer's name, amount in words, amount in figures, drawer signature, check scheduled in error that you come across where a check is scheduled in a clearing batch unrelated to the bank, technical errors. Check irregularly drawn. Give me an example. Milhan, give me an example of, not only you, I told this to everyone. Example of check irregularly drawn. Give me an example of check irregularly drawn. I've taught you this. Very good. cash order. Right, check not drawn in accordance with the mandate. Right, if the mandate requires to both parties to sign and only one party has signed. Check cross to two banks. Section 79 says you can't cross a check to two banks. Only a bank can cross a check again. Right. Drover's mandate ambiguous. Right. Drover's signature required or differs from specimen. Drover disease, you mentioned that Drover's mandate inoperative by law. For an example, let's say the Drover is a company is under liquidation and the Drover's mandate is inoperative. Or else there was an instance, see, there was a union back then, it's still there, and there was the current office bearers were the signatories, right? And then there was a AGM, and there was a dispute with the current office bearers. And after the AGM, one fraction of the union, some of you all also know this concern. One fraction of the union had their own AGM and appointed new office bearers. The new office bearers sent signing instructions to the bank, new signing instructions. Repealing the old one, and the old office bearer said the new ones are not recognized, and so things like that, and they were issuing funds. Then I took the decision, nothing doing unless I get a court order freezing the not freezing the accounts. We are not recognizing. Mandate is ambiguous now. Right, so that's a classic example for that. So notice of lunacy of the customer, for all these things, Drover's mandate inoperative by law. If the customer is bankrupt, notice of an assignment by the customer of the credit balance, all these things, maybe in favor of a credit agency or something. Then if the endorsement is irregular, endorsement illegible, you can't read it, endorsement required, you need the valid endorsement for it to be endorsed, which you can see it is endorsed, but it's not properly done. Payment stopped by Drover, yes. Mutilation requires bank's confirmation. Yes, if the check appears to be torn in such a way as to indicate the Drover's intention to cancel, it obliterates a material part of the check, such as the date or the word order or bearer above answer place. The onus on the collecting banker to confirm the mutilation is unintentional, because you cancel your intention, by mutilating it. Either you cut across it, or sometimes it might happen accidentally also. If that is the case, the paying bank would return the check for the collecting bank to get that confirmation. Otherwise, they would not be protected under section 79 and 82 on the protections given to the paying bank and the collecting bank respectively. Payment postponed pending Drover's confirmation. When if the countermand instruction is not confirmed in writing, basically, like I said, I call the bank and say, look here, I call my RM and say, stop the payment. I will send the instructions in writing by midday. But I know by now that the holder of the check has gone to the branch. Then the bank can return the check, countermand instructions not confirmed in writing. The bank, prima facie, on the face of it, knows that it has been countermanded but waiting for confirmation. So that also you can use. Use these provisions. I don't see bankers using these provisions much. Countermand instructions incomplete. If I have not mentioned the check date and only the check number, the bank might want confirmation on that. Notice of any defect in the title of the person present in the check. So that brings us to the end of Bills of Exchange Ordinance, including checks. If you have any questions, you can ask from me now.
Sir, a person known to me had a problem. So actually now this person worked in an IT firm, as he told, as I can remember. So now it was a firm run by a foreign person. And then after a few years, after about 6-7 years, now that man wanted this person to resign based on the non-performance. So the ground was non-performance. Anyway, now he submitted the resignation, and after resigning, then this person was issued his gratuity check, right? Then after issuing the gratuity check, then after few weeks or few days, so anyway, now I think that foreign person had an intention to close the functions, the operations of the company as well. So anyway, now they had that person was informed that they have stopped the payment of that gratuity check, right? So now he has submitted the resignation, then he got this check for as his gratuity payment. Now they have stopped the payment. So what is the remedy this person has, basically? Because now he knows, because verbally I think he was informed that they have stopped the payment. So in that case, can that person deposit the check and get it bounced and go for legal action? So what is the remedy available?
See, all these are still until now, you just, even up to now, these are all on assumption basis, because still he's assuming that the check is stopped, but it's not a matter of fact. How can it be a matter
verbally?
Yeah. So
Yeah.
how can it be a matter of fact? It becomes a matter of fact. The fact of it's being stopped becomes a fact only when he deposits the check and it bounces. So he has to do that. Then only his course of action starts. Up until now, it's an assumption. Once that is done, very simple method. You have so many legal avenues now, especially now. This is not just a relationship between bank and a customer and just the drawer and drawer. It's not only a relationship between a drawer and drawer. This is, in addition to that, a relationship between an employer and employee as well. So in addition to the see, he has so many avenues. First thing is go and make the complaint to the labor department. Then labor department, after summoning whoever the employer, will take criminal action again under the Gratuity Act at the magistrate courts. Secondly, he can go under the Debt Recovery Act. Thirdly, he can go and, based on the amount of the check, he can go and make a complaint to the police. The police will issue raise a B report, and after noticing and summoning the person, even can get an arrest warrant. He has to deposit it.
Yeah, that's what, sir. Okay, sir. Thank you, sir.
No other questions? You have a couple of minutes left. Use this. You will have 101 questions when it near for your exams. And believe me, whatever these questions that you are allowed to ask now is normally very expensive. Nope. Okay. Then we'll call it a day and we'll meet next week. If you haven't got any questions, have a pleasant evening. Bye-bye.